Hello and welcome to Ask Bellco, the show that answers your financial questions. To have your questions answered on Ask Bellco, just send us your question on social media using that hashtag AskBellco. This week we'll be answering home equity loans and lines of credit. What are they? How do they work? Now we're going to meet the expert who can answer that question, Jamie Slavin, Associate Director of Mortgage Sales at Bellco. Jamie, welcome back.
Thanks, Jack.
You are the first guest that we have had back on the show, so you got some bragging rights there.
I'll take them.
So what's the difference between a home equity loan and a home equity line of credit?
So at Bellco, we call our HE loan, or home equity loan, and our HELOC, home equity line of credit.
It took me an embarrassingly long time to put that together, but I got it. Yeah.
We call them both our choice line product. And the idea behind this is really to give members choices to fit what is going to either meet their life cycle, where they're at in their income or credit life, as well as loan product needs.
So what I'm hearing is that both HELOCs and HE loans fall under choice line as products, but what are they?
Yeah, no, great question. And really what they are is they're a second mortgage loan product that is secured against your home, one of which is variable, and that's the HELOC. And you can also draw and repay on that, kind of like a credit card secured against your home.
So now I'm starting to put it together. So a HELOC is like a line of credit. So, like you said, it's secured against your home, so there's some kind of collateral there. But it operates like a credit card. You can withdraw money and you can pay it back.
Correct.
So then walk me through the difference between that and a HE loan.
Sure. So a HE loan, at the end of the transaction, the loan funds, you get this amount of money, and then month over month over month, for 20 years, you pay a fixed payment until that is paid back.
So it's kind of a traditional loan. You're going to get an amount of money. You're going to have a monthly payment that you're going to make, and you're going to pay that back.
Correct. Yep.
So how does Choice Line work in regards to all of that then?
So the Choice Line is the marketing name that we've designated for these two loan products. Really what it's based on is it's based on your FICO and your loan to value, or LTV.
Okay, I remember FICO. We talked about that. But loan to value, I know I've heard that term before.
Yep.
But let's break it down here.
Sure.
What is that?
So think of how much you owe on the home as the loan.
Got it.
How much the home is worth is the value, and the ratio of those two. Let's say that I own 80, or I have 80% loaned out against the value of my home.
Okay.
I would be at 80 LTV, or 80.
So that's your
value.
loan to value.
Correct.
Okay, great. So it's a ratio,
Right.
basically, of
Correct.
how much you owe versus the value of the home. Okay, that makes sense. So with these price line products, then, is it variable? Is it fixed rate? How does that work?
Great question.
Choice line products.
Yeah, so great question, and really what it comes down to is what the member wants. You know, if it's a short-term product in terms of duration, maybe it's a quick backyard DIY project.
Oh yeah, that would be a good reason to do something like that.
And I want to take something that's short-term. I've got a bonus coming up, and maybe I think I can get that loan paid off very quickly. That might be a reason why I would elect to take a HELOC instead of a HE loan. And let's say that I'd also like to have future access to that money.
Oh, okay, that makes sense. So it kind of sounds like some of the choices that you're going to make in regards to a HELOC or a HE loan kind of have to do with where you're at income-wise as well, right? Kind of what where you're at in your income, kind of over your life.
Right.
Am I right on that?
Yeah, absolutely. You know, I think there are a couple of different cycles of your life that really kind of dovetail into banking. One being, the credit cycle, right? Which I know that you talked with Carly recently about, and we got through that. The second being, as you get to maybe your late 30s and early 40s, you're in what they call your peak income earning years. So you may have less of a risk appetite depending on where you're at in that stage of life, that would then dictate, okay, I'd like a fixed loan product here, or
Sure.
maybe I'm okay with a variable loan product here.
So it kind of sounds like a line of credit might be better for you in those kind of peak earning years. Does that mean that like younger people should look specifically at HELOCs versus HELOANs?
No, I wouldn't say that there's any one way that we'd want to broad brush anybody into the loan product. Again, it's called the choice line so that it's really up to you.
You have a choice.
Yeah.
Yeah.
And if let's say you're not traditional for your age demographic, you don't like risk, but maybe others in your peer group do, well, we'd like to make sure that this loan product fits for you.
Right.
And not for what everybody else is doing.
Right. Well, and that's kind of a recurring theme, I feel like, that we find with Bellco, is that we don't like putting people in boxes. It's really about the individual and what their needs are going to be.
Yep.
So we talked a little bit about DIY kind of projects, and we talked about maybe using it for an emergency. About the individual, are there any sort of limits on what I can use this money? Are there rules? Do I have to walk into Bellco and tell them what I'm going to spend this cash on?
No, I mean, again, that's the other idea with choice line. It's up to you. Generally, we'll have a conversation about what we see as some of the best reasons to utilize a choice line. Generally, we see people who do kitchen and bath remodels. That's maybe a better use of it than
water slide.
Water slide, or new fancy sports car.
Yeah. All right. But I mean, but a water slide, that could increase the value of my home.
If you find the right water slider, it could.
I think that's true. You got to sell it to a water slide enthusiast.
Yes.
After that, we're kind of joking around. We're in the weeds a little bit here. So if I wanted to take advantage of one of these choice line products, what kind of costs, what kind of fees would I be looking at?
Really, the major one is going to be opportunity cost.
What is that opportunity cost?
So what I mean by that is, if you elect to take a $5,000 draw at closing on either a HELOC or a HELoan, there are no closing costs.
Whoa.
So what I mean by opportunity costs is it's really what you associate your time value of coming into a branch, getting some education, seeing if this is the right product for you.
This is more of an energy investment than a financial investment.
Correct. Yep.
That sounds great. Can anybody just walk into a Bellco and ask about this stuff? Do you got to be a member?
Yeah, I mean, one of the big things and one of the reasons why we're here, Jack, is to educate and engage. And certainly we love to do that for our membership, but we know that there's a lot of folks out there who maybe haven't experienced Bellco yet, who might want to come in and take a look. We'd certainly welcome that. Hopefully folks will see the difference between what Bellco offers and maybe some past banking experiences, and we could win their business.
Well, I think that's so important, and such a great thing that Bellco does, is that you can just go in and ask questions, because I think probably a lot of people that tune into this show do so because they have questions and they're just not even sure where to start. Who do you ask? What? So I think it's great that Bellco offers that, and it's pretty easy to become a Bellco member, isn't it?
Absolutely. It takes about 20 minutes. You go through a quick series of paperwork in order to do it. You become a member with a $25 deposit. Then you have full access to all of the membership things that Bellco can offer. Not only that, but you're also become part of a shared banking network with over 9,800 ATMs across the country.
That's right, and we talked about that last time you were on. Well, you heard it here first, folks. Stop into a Bellco. They can answer your questions. They can help you out. I feel like I learned a lot today. Any final points that you want to add on HELOCs or HELoans?
I think that they can be a great product for anybody for the right reasons. Again, what I would say is it comes down to education and engagement. We want to take some of the stigma away from financial literacy and some of the more complex discussions that come with it. So we welcome that opportunity to have a conversation. Hopefully along the way, folks end up coming to Bellco, but if not, we're doing our part.
Well, absolutely. That's why we had you on the show, is to educate people. And speaking of which, thank you very much for coming on the show.
Thanks, Jack. Appreciate it.
All right. Tune in next time, folks, when we are going to be talking about credit cards. They can create debt, but can they also be helpful? Tune in next month. We'll find out.